resistance or supply zone. This is where sellers often appear, thinking that the price is high enough to sell and take profit. So how exactly do you draw basic support and resistance levels on your chart? It's very simple. I've made many detailed videos on this channel, but let me give you a quick demo. So you always want to start from the daily chart. You're looking for areas where the candlestick wicks at the bottom have been picked up. So essentially you can see over here, this is a very clear one. Stock sold off to that level and then got bought back up. So that's going to be a potential support area. Same thing over here. You can see stock dipped over here and got bought back up and went up higher. Same here, you can see multiple wicks at the bottom. Those indicate areas where people stepped in to buy the stock. So once you know that, you can see there's various support areas here as well as down here. You just want to identify all the wicks, and that's where in the past people have stepped in to buy the stock. So these lines that we just drew on the chart became reminders that this is a potential area of support or demand area where price may either hold and bounce back from here, or if it does break down, it can sell off even more aggressively. So resistance levels are areas on the daily chart where sellers have stepped in to sell. So instead of looking for wicks at the bottom of the candlestick, now you're looking for wicks at the top, meaning that when the stock broke out to those areas, people sold into the breakout. So this is where you can see long wick on the top. This is the resistance over here. Some other ones here as well here, and definitely all the way up here around 140s today. And then you can see somewhere over here. And this is where you can see that a lot of the resistance levels we just drew out are actually interchangeable with previous support areas. As you saw just now, identifying support and resistance is actually extremely simple and effective. These levels can now be used to create and form really good entries for technical setups, such as the daily support dip buy. Remember, the entries will be at extreme support areas, the backholder daily short, where the entries on the short side will be on the daily resistance levels. And finally, the technical scalping strategies, where your entries will be at the intraday support areas and exits will also be intraday resistance because you're scalping the range. So now that we covered the basics and the most important foundation, let's move on to the next important level you need to know, the intraday level of previous day's closing price. Now, the same horizontal charting technique you just used for support and resistance can be used to identify a more psychological price level for intraday trading, which is called the previous day's closing price. Just like the key daily support and resistance levels we talked about, previous day's closing price actually plays a huge part in technical trading setups, such as the first green day bounce, the first red day short, and scalping strategies. So we're looking at the intraday chart for NVIDIA. This is a trade I did a couple of months ago. This is when every single day NVIDIA is gapping up and making new all-time highs. Now, the dotted line you see here, this is the previous day's closing price, meaning that if today is a Tuesday, hypothetically speaking, the previous day's closing price is the last print at 4 p.m.